Hello and welcome to Trade Room, where we help you become a better binary options trader through accurate price action trading. In this video, I'll be showing you how to trade any market condition, whether it's in a range, an uptrend, or a downtrend. Before I get started, it is important for me to let you know that trading any market carries a significant level of risk, and you should only invest money you can afford to lose. Please like this video if you find it valuable, comment down below with any questions or suggestions you may have, and please subscribe to the channel for regular binary options trading content that will help you become a better trader. Let's get into the video. So in today's video, we are talking about market conditions and how to trade them. There are three main types of market conditions: a range or sideways market, a uptrending market or a bullish market, or a downtrending market or a bearish market. So let's look at our first market condition that we have right in front of us, which is a ranging market or a sideways market. There is no upward trend, there is no downward trend. The market is sticking between a high and a low, and neither the high or the low is being broken. So first I'm going to show you how to identify this, and secondly I'm going to talk about how you could go about trading this. Okay, so it's pretty easy to identify. A ranging market is simply when there is a clear support as well as a clear resistance level that price is trading between. I'll draw the support and the resistance level so you can clearly see where this market is ranging. I would draw my resistance level there, and my support level will be here. Now, you wouldn't know this is a ranging market, right? It would be trading like this. I can clearly see this is a stop hunt candle. We've had a massive push to the upside and then a gap to the downside. It's a pretty clear and obvious stop hunt. And right over here is where we would have drawn our first resistance. Okay, here is a clear resistance. Price is not breaking this area except for the stop hunt, which doesn't really count. This is our resistance level. All right. Then once that has happened, we can paint a clear support level. So that is when we would put our support here. Now, what we would look to do in this situation is, now that we understand we have a ranging market, we've had at least one and a next resistance as well as one and a next support. So we've got two areas of resistance, two places where price is rejected. That gives us our clear resistance, and two places where price is rejected over here, which gives us our clear support. From here, there are two ways we can look to trade this. We can either trade the resistance as is and the support as is, i.e. selling the resistance and buying the support, or alternatively, we could trade breakouts of this. Okay, personally, I only like to trade break and retests. I do not like to trade clean breaks. I only like to trade if it breaks and retests. And I like to trade continuations of the rules of the range. So when we get a candle signal off of either the support or the resistance, that is where we will look to trade. And as you can see here, we've got clear areas where we could have placed trades as price is hitting the resistance level. Those are where we will be taking our entries. And because we are on a 1 minute chart, we will be performing 1 minute trades. No matter where you traded on this level would have ended in a profit because nothing closed above the level. And then it's the same for the support. And as you can see, we have a clear test. If we have traded on the level, it's pretty clear and obvious that this would have been a profit. So that is how we would look to identify as well as trade support and resistance when it comes to a range. So that gives us our ranging or sideways market example, let's move on to our uptrend and downtrending markets. Here we have our clear uptrending market. And it's pretty clear and obvious how we can identify this. By looking at the lows and the highs that price is making, in order for it to be an uptrend, we want higher highs, higher low, higher high, higher low, higher high, higher low, etc., etc. This forms a very clear and obvious uptrend. Now, there is one and only way we will look to trade an uptrend, and it's the exact same for a downtrend. And that is by trading break and retests. So we have our resistance level, as you can clearly see. Price then breaks to the upside, retests. This is where we are looking to take our trades. Then we have our next level over there, forms a resistance, comes down, break and retest. This is where we are looking to take our trade. Here is our next level of resistance, and as you can see, prices hit there, come down, forming our resistance, break and retest to continue to the upside. Then our next level of resistance, and as you can see, when we've broken, clear break, retest, continuation to the upside. Next area of resistance, we have a break, retest to the upside. And as you can see, this is something that is very, very powerful. The break and retest is something we like to use a lot, and it is quite clear and obvious how to trade this. So we identify an uptrend by looking at the highs and lows. We want higher highs, higher lows. We mark off our areas of resistance and we wait for price to then break that resistance, and we trade on the retest of that level, which then turns into support. And lastly, we have a downtrending market. Now we identify this market by looking at the highs and lows, and we want to see lower lows and lower highs. So lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, etc., etc., forming a downtrend. Now, the way we look to trade this is exactly the same way as we look to trade the uptrend, by finding our levels of support and trading the retests. Now, let me show you exactly what we're looking at. We have a level of support formed here on the low, higher, lower high. Price then breaks this level and comes up for the retest, which we will trade. Price then forms another low, and we are looking for a break and retest of those levels where we would trade over here. Once again, price forms a support level, which we will look to trade the retest of. Once again, price finds another support level, which we trade as another retest. And here is another level that we would look to trade as a retest. And all of those would have been profits. Now, it is important to mention that not every trade will always be a profit. You will lose trades, but what is important is having a clear risk management strategy in place, sticking to that, and as long as you're going to profit more than you're going to lose, you're going to make money. So I hope you found this video helpful. If you did, please give it a like, comment down below with any questions or suggestions you may have, and subscribe to the channel for regular price action binary options trading content.